idea of the direction of the market. You have a safe zone. You can place an order entry. You can have a take profit, where you want to take your profit, not just stop losses. For instance, if you felt like, you knew that this was going to be a pullback right here in this area, and you said, okay, well, when this swings, if this swings according to, how for, you know, you might have said, okay, I'm going to put my stop loss right here because remember, we never really use this one, but this is the one we use. So we would put our stop loss right in just a little bit above it, just in case it touches it or pierces it. That's a rule. You always go a few points off, 3 or 4 points. Just kind of measure where it's already pulling back on, and then kind of get you some type of ratio of how far you want to go by based off looking at that particular support and resistance. Okay, so now we're going to go back to the area. First, I will auto fit this so we can make sure that this is, yeah, it is on auto fit, so we're there. So I'm going to shrink this up a little bit, and we're going to go back to the beginning of where we've seen our first low, right? This is where we're going to start at, right here. So this is where I want you guys to start on this particular lesson. Your lesson is to complete these at the 618, the point 0.5, 382, and a 236. You're going to put your, I use powder blue, sky blue, but you can go ahead and go with the white. Okay, so now I am going to go ahead and do this one right here real quickly because the reason why is because if we see any overlaps, we we're going to have a rule that we're going to change the color. We're going to change the color if we happen to have any overlaps. And I'm just going to keep, I'm not going to measure them up. I'm just going to put them on there real quickly. I'm not going to completely line them up because, but remember, we know the rule that we want these precisely where the Fibonacci levels are. I'm just trying to speed it up so I can move on to some other areas that you're going to love. And I hope that at this point the light is coming on with you guys and you're starting to get the idea of technical analysis and how much the work, how it's not really as hard. These This is why we did two windows. Remember, we had two windows, and look at this now. Imagine if we would have had all this information right here along with all these other indicators that you now know about, the stochastic, the RSI, the MACD, the volume. Oh, we don't have the volume here, but I will add it by going where? To our favorites. Oh, so simple. But what do we see? There's no volume. It's okay. We can just click right here, right? How about opening this up when we do this? That's probably why there's no volume. We'll close out of that. That may have been the wrong one. So we will click right, maybe here, right? No, it's not there. Is it this one? No, it's not that one either. We have to go to the right tool that allows us to do this. Um, it should be right here though. Okay, here it is, built-in. We go to built-ins and we're going to stroll down to volume since we didn't, oh, what is that? Since we didn't see it in our favorites, right? We know it's over here. We just need to be able to pull this down. Okay, there we go. Volume, right? We didn't say volume oscillator. We just want simple, plain Jane volume. And we're going to star that as a favorite. So let's close out of that and go back to our favorites and see if it's there. There we go, favorite. There it is, volume. Click on that. There we go. Now we have our volume. Okay, so now we have our volume. We have our moving averages, and apparently we don't have them on here. I should have put them on there. I do apologize, but you all know, and then go back to lesson 3. It's the 10-day, the 20-day, the 65-day, the 10, 20, 50, 65, and the 200. And we already know what that looks like in the previous chapter. And I'm going to continue to move on with the lesson. But the reason why I did these two separate, because now you have direction. You have support and resistance levels, giving you an idea of where to put your take profits, where to put your reversals on the pullbacks, and as well as to put stop losses, maybe a couple of pips, maybe 10 pips, depends on your margin level of how far it's going down. Just do a ratio, measure the ones that you can in each line, and then divide them. And it'll give you a ratio of how far you may need to want to put this, in terms of, you know, because that kind of, remember, you're lining everything up to where you can capture a grid. A grid is basically what I talked about, the black space in it, and I believe it was the introduction of candles. This is why we're here. This is, remember I said, picture this as a book. We write all this story right here, but this story is not written yet. Picture these as outlines. You're imagining that this market is going to hit these areas, and as it trades, you're going to be able to use these lines as a way of protecting yourself and having potential ideas of where the market may turn. That's all these are. That's all technical analysis is. Being able to give you a better edge. And don't you feel better now knowing that you can kind of look at the market and get a feel and an ideal, even though everything is lagging, at least I know that, when I make this trade, I got an idea of where the market may come. I got a higher percentage level than what I had before when I was just betting. And that's why a lot of people that don't know nothing about technical analysis, the first thing they say, oh, this is just you guys gambling. You know the difference between a trader and a gambler? A gambler makes bets to make money. He takes bets in hopes that he will receive an amount of revenue. A trader holds on to, or at least tries to, hold on to the money he already has. And that's exactly what you're doing. You're in a trade. You're getting ready to make a trade. You're trying to hold on to it. That's why you have stop losses. That's why you have take profits. That's why you have these pullbacks, these imaginary ideas. So that way when you get in a trade and it pulls back, it doesn't go against you. And now you're so low, you're locked in, waiting for the market to what? Pull back up. We're going to know how to do these retracements. That's in advance. Right now, I'm just trying to get you to support and resistance levels. And again, and this is getting ready to come up, the advanced class. You're going to be happy and know that this right here, you got a great benefit. ProReadinessTraders.com. Go to it, sign up, enroll. Never can forget that. Okay, so we're going to finish. Well, I'm just going to place one more right here, but I'm not going to use it. Okay, yeah, I'm not going to use it because, for one, the reason why I'm not going to use it is, and as you can see, this sometimes is sticking. Okay, there we go. So I really don't want to, because the reason why I don't want to do this bottom one, because the market is nowhere near this area. Nowhere near this area. Market is way up in the 44s, and I want to be able to get you guys to another area of learning. But the support and resistance level, we have these horizontal rays. We are now, we're doing some work here. And if you were to lock all these horizontal rays in, if you were to lock all this in, right, at this point you can get rid of your Fibonacci. You can delete them, right? But for right now, I wouldn't do that because you didn't lock all these in. Had I locked them in, I would have deleted these because it helps once I start to, in your advanced level, because you're going to go back to doing waves within these waves, swings within these swings. And that is what's going to be able to compromise and confirm whether or not these are really true areas of support and resistance. It's just confirming it. But I'm going to show you another way how to confirm it. Because remember, as we talked about, all these indicators are confirming each other. The trend line is being confirmed by what? The stochastic. The stochastic is being confirmed by the RSI and the MACD. Vice versa, MACD is being confirmed by the RSI. the candlestick pattern that we see in here, that the market may be shooting down as a form of a head and shoulders. What do we see? We see there's a stochastic right here. It's showing that the market is overbought. However, the RSI hasn't hit above the 80, so it is possible that this market may still be going up. But we see right here, we don't know whether or not this MACD is crossing over right here, because if it crosses down, that means what? A powerful down, or if it crosses over this way, it's a powerful up. So now we're kind of in decision. Now, had this been all the way at the above the around the 80 line, or I'm sorry, if this would have been crossed up or down, and it doesn't matter where this is, but it could be what is called the zero line we usually have right here, and that's this right here. It's a zero line, so it's still above here. But if it was below here, heading down, it's a sign it would be going down. But this right here needs to be right here, getting ready to go down. So if these three are lining up, it's almost like it's a go. Put your money where the mouth is. Get that money. Okay, so we have support and resistance, and we gave them a color, right? Now, with that being said, we're going to talk about a little bit about our next subject, which is going to be a backup. Put it this way, let's just call it a backup for what we're doing now.